Computer. Okay, start recording. Hi, thanks everyone again for joining us. Thank you, Kelvin and Chester, for inviting me. My name is Aaron. I used to be a Rotaractor. Rotaract is very close to my heart. I was in the Rotaract Club of Subang, and I was there for a couple of years. Is everyone hearing me okay? I think one or two people may. Yeah, if you're having trouble, maybe try rejoining, and I think you may be able to hear better. Yeah. All right. Yeah, again, if you're having trouble, please try to rejoin, and then I'll try, we'll hope that works. So thanks again. I was with the Rotaract Club for many years, made really good friends. I would definitely recommend you to take a look, to explore. If you've not heard of Rotaract Clubs before, you can have really good time having fun, but also do lots of community service. Okay, so apart from being a member of the Rotaract Club, I also write a blog. I write a blog which goes by the name Mr-Stingy. I write a lot of articles about many things in life, but one of the most, I guess, popular things I'm known for is in the area of money. So Chester and Kelvin invited me to do some sharing about personal finance, and some of you have already submitted questions. So I will try to answer all these questions as much as I can, but you know, we have a live question and answer session at the end of this session. So if your question doesn't get answered during the presentation, please type it in the chat box and we'll try to answer it ASAP. So with that, I'm going to share my screen and then we will jump straight into the presentation. Kelvin, Chester, are you seeing my screen okay?
Yeah.
Yep, yes, we are.
Yeah.
Okay, let's go into full screen mode then. Okay, so today's topic is personal finance sharing with Rotaractors. The time allocated itself today is for 1 hour, so we'll be here until 8 o'clock. But I think the presentation itself, I'm just going to do it for, I'll try to finish it up within 30 to 40 minutes. So after that, we want to leave it for question and answer. All right. So this is my blog. If you've not visited it before, you can go to www.mr-stingy.com. This is an example of an article I wrote, which is called How to Invest Using a Robo-Advisor. Okay, this is my blog. So standard sort of disclaimers. Let's talk about what is financial advice and what is not financial advice. The term financial advice in the, in the financial industry, it refers to someone who can professionally advise you on your finances. You actually need a license to be able to do this kind of thing. So not anyone can just go around giving financial advice. People aren't supposed to be telling other people like, buy this stock or buy that investment without a license. Today's sharing is not financial advice because I'm not a licensed financial planner or anything. If you're looking for that level of advice, you can of course hire someone to do it. But yeah, today is more of personal opinion and experience. But I hope that you'll be able to get benefits out of this. A lot of this is things that I've gone through myself. And I think it'll be quite helpful for a young person. Now, I know most of you are probably pretty young. I was told that most of you are probably in the beginning stages of your career. If not, you are still students. So I think these are really important things that someone young should know first about finance. And then again, if you have some really complex, super difficult questions at the end, feel free to put it into the question and answer chat box below, and Kelvin will help me manage that later. Okay, with that, I am going to move on to, I'm going to admit a few more people who are waiting, and I'm going to move on to part one. So part one is about coronavirus and the economy. I think we are in a very interesting stage right now with the coronavirus. And we'll talk about how the virus is affecting the economy, how it is potentially affecting people's money, people's income for, who knows, maybe the next 1 to 2 years. So the first topic I want to talk about is why you and I need to stay at home. If we look at the graph of how confirmed cases are increasing, this red line here is the United States. They've got tons and tons of cases happening. This line here is the United Kingdom. A lot of people are still getting infected. South Korea has done a really good job. So they've sort of managed to, as you say, flatten the curve. Singapore has had a recent spike, and Malaysia is just here. I think we're around 5,000 cases. But the really good thing that's happening in Malaysia is that the number of new cases are slowing down, and the number of people recovering are actually going up. So in other words, the virus isn't spreading rapidly in Malaysia, which is a great thing, because for as long as the virus is a risk, the economy is sort of halted. Everything is shutting down. So let's do our parts to stay at home right now, in case you're wondering why the whole panic about it, because without getting rid of this virus, without putting it under control, there's a huge risk to the hospital system, the healthcare system. So we do need to get it under control. Thankfully, it's almost there right now. So moving on. If you're already an investor, you'll know that in the investing world, a crash has already happened. This was sometime during the early March or middle of March. This is the S&P 500 index, which is actually what you would call a representation of the United States stock market. And it crashed in the middle of March, okay, to its lowest point. Since then, it's come back a little bit. It's recovered, I think, about 20-something% since the lowest point, okay? Closer to home, this is the picture of the Kuala Lumpur Stock Exchange, which has also crashed somewhere in the beginning of March as well. It crashed to its, I think, lowest point in more than 10 years. And then it's also recovered a little bit. So if you're already an investor, you know that stock markets, everything has basically crashed, whether that is gold, whether that is stocks, whether that is unit trusts, whatever it is that you are interested in investing or people normally invest in, that has recently crashed. Which is quite interesting, because the concept of the economy or economics is that everyone is actually linked, like a spider web. Imagine a spider web. So I'll give you a simple example here, okay? These are 3 people who may not seem like they are linked in any way, but their fates are actually tied to each other very closely. So let's say Ryan owns a boba shop, okay? He sells bubble tea in SS15, contributes to the jam. Ryan is a boba seller, but as you know, the country has been under lockdown for the past 1 month. He has not been able to open his boba shop in the shopping mall. Sarah, who is his sugar supplier, supplies sugar to help make the bubble tea. But because Ryan has been unable to open his shop for the past 1 month, he's not going to have cash to pay Sarah for the supplies, okay? He picks up the phone, he calls Sarah and say, I'm so sorry, I'm unable to pay you for the sugar supplies that I owe you. So Sarah now is in a big problem. She's unable to receive payment for last month. And then this spreads on to Makcik Kia, who's very famous if you've been following the Prime Minister's announcements. She opens a goreng pisang stall. Sarah has no money, so Sarah doesn't go out and spend money. So Makcik Kia's livelihood is affected. So the point I'm trying to make here is that everyone in the economy is linked to each other in one way or the other. If one part of the spider web or one part of the economy is hurting, everyone else hurts, right? It's just a matter of whether it's a big hurt, it's a major issue, or it's a not so big issue. So the principle is when the economy is down, everyone suffers. Now, is the government not going to do anything about it? Of course they're not. Of course they're going to do something about it, because if the economy goes down, things will get really bad for the country. This is I picked this comic from this guy who writes this comic, Ernest Bro. Really cool comics. If you haven't checked it out, make sure you check out Ernest Bro. He's got some really cool anime going on. This is Muhyiddin coming to the rescue with his 250 billion stimulus plan to try and help the economy. So some of the things you might have already heard, things like this. Cash payments. So students, if you are a student, lucky you, you're going to get 200 ringgit in May, I believe. If you're an adult single earning below 4,000 ringgit, you're going to get 500 ringgit. And if you're adult single earning below 2,000 ringgit, then you're going to get 800 ringgit. There are other changes. For example, the EPF, you used to be sort of forced or mandated to contribute 11% of your salary. Now you have an option to change it to 7%. And you can also withdraw some of the money from the EPF. Okay. Besides that, there's also a 50%, up to a 50% discount on electric bills. And for those of you who already have bank loans, you might be able to get a 6-month moratorium, or sort of what do you call that? Sort of a 6-month delay in paying back the loans. So these are things that the government is rolling out to really try and help people in this time. Some people may say it's not enough. Some people say may not be good enough. But I think the government is trying their best. So I think we all can do our part to spend the money wisely. And we'll go a little bit more into what you can do with your own money later on. Right. So the next question really is, why is the government trying to spend so much money? If you think about it, this is a bit like free money. The government is giving free money here, left and right. If you own a small business, the government has announced some kind of help for small businesses as well. I think everyone is basically trying to prevent a recession from coming. What's a recession? What does it feel like? These are things that we're going to cover in the next few slides. I'm going to try to cover this from a sort of layman perspective. So if you're new to this, this is going to be explained in like basic everyday language. So what exactly does a recession mean? If you go about it in a very economics kind of perspective, recession means things like 2 quarters of negative GDP. These are all very technical jargon. We don't have to think about it that way. You'll know a recession is here when people around you, your friends, your family, your colleagues, they're complaining that they have run out of money. And everyone is feeling fear. Fear is in the air. You know, normally people are pretty hopeful. Normally people are saying that, you know, I'm going to invest, I'm going to do business, I'm going to get wealthy. But you know, a recession is here when everyone is scared. You know, everyone is afraid of shutting down their business or going out of work. I think the biggest item here, number 3, is retrenchment or job losses. So in a recession, a lot of people lose their jobs because companies can't pay their staff anymore. If you look at economic data from the United States, I think they already have 16 million people who filed for unemployment benefits over the past 3 weeks. So that's 1 month, that's 16 million people who've already run out of work. In Malaysia, we're not sure what the number is yet, but again, the risk is high. And of course, whenever you face an economic recession, there's an increase in crime because people, I guess when people get desperate, they may not be able to follow the rules. People go hungry, they may get desperate, and petty crime tends to increase. So these are the recession signs for, I guess, in a layman's terms. And some industries are already affected badly. For example, if you're reading the news, following the news, you can see that airlines are already struggling badly. People are saying AirAsia has maybe a couple of months cash left before they go bankrupt. Who knows how long Malaysia Airlines has, but airlines is really, really doing badly. But things like tourism, events, sports, hotels, Airbnb, all these industries are already doing really badly right now. An interesting sort of other side of the coin is that technology companies, some of them are actually doing well. So companies that are involved in things like video conferencing or online collaboration, like this software we're using here, Zoom, these companies are fortunately or unfortunately, they are suddenly doing very well. Okay, so there's sort of a plus side and a negative side, but most industries have been affected very badly. Something that we are all worried about is this term here, SMEs, which are what you call small, medium businesses, and micro, small, medium businesses. Think of your boba tea seller, think of your goreng pisang seller. These people are all at risk of running out of cash because everyone is at home and no one is spending money. I'll give you another scary statistic. People are saying that most small businesses will run out of cash within 1 to 2 months if they don't receive any kind of help. So that's a pretty scary thought there. More statistics for you, hopefully you like them. 66% of all employees in Malaysia actually work in small or medium enterprises. I think even like myself, I work for what you would consider a small enterprise. I think many of us do. Those who are like in multinational or big companies, they may be a bit luckier, but most of us actually work in small companies. So the government really needs to try and protect these companies. I think the last point I want to make about the economy is that Malaysia is historically very dependent on oil. You know that we have a major oil industry, but oil prices have also crashed. I think normally it's around the $50 to $60 benchmark price. Recently it's hovering around $20 to $30. So yeah, our economy is basically not in good shape because everything has shut down. Even the oil price, which normally bails us out, normally Petronas gives a lot of money to the government. Petronas probably doesn't have that much to give this time. So that's kind of the first part, which is I'm not trying to scare you, but these are very, very difficult times, I would say. Some people are saying that it could be as catastrophic as a once in 100 years event. Ray Dalio, he's one of the most admired investors in the world. He's the head of the world's largest hedge fund. He manages, I think, about 30 or 40 billion dollars of investment money. He's saying that this might be as bad as the 1920s kind of depression. Okay, so not to overly scare you, but these are serious times. Be prepared for I think some challenging times ahead. Okay, so I'm going to look at my clock, 7:24 now. I'm going to jump into part 2, which is some tips for young people and how they can navigate these kind of difficult times. So again, if you've just joined, feel free to put your questions in the question and answer chat box. Kelvin will help me later to sort of manage those questions, and we'll have a chat around them. So part 2, I want to speak about 3 money tips specifically for young people. And there's a reason why I selected 3. The last time I ran one of these sessions for protractors, I think I went into like 7 or 8 money tips for young people, and I think that was a little too complex for a short period of time. So I'm just going to focus on like 3 really important points. Okay, I want to go a little bit deeper into these 3 points, but I think they are really important for young people like yourselves. So tip number 1 is really, you've heard this all the time. You hear this from your parents, your old people, your relatives. I don't mean to preach or nag, but it's really the most important thing you can do right now. And that is to build cash savings. Don't even think about investing. Don't even think about sort of striking it rich in the short stock market. The most important thing you can do now is to build cash savings. We've gone through how sort of serious the economy is in a situation right now. So cash savings will actually it'll actually give you that little safety buffer to prevent anything from going seriously wrong with your life. because you know that whatever happens, whatever emergency happens, you'll need cash for that. So I'd like to bring you to this graph here. Really simple sort of personal finance 101 kind of graph. And it's how to save money. I try to put it in a picture here. If you imagine the left side here is your income. That may be your monthly allowance from your parents. It may be the money that you get from your part-time job. It may be your full-time job, okay? Imagine that this whole blue box here is your money, whether that's 1,000 a month, 2,000 a month, 3,000 a month. On the right side here is how you are spending this blue box, okay? How you're spending this money, this income you have here. And the concept is simple, right? Whatever you spend, this red little box here, whether it's your house, your car, your personal loan, your credit card, your shopping, whatever is left over, that's your savings, okay? So you have your income minus your expenses, and then you end up with your savings. So, and I'll share with you this personal story of mine. When I first started work many years ago, I basically never saved any money because my expenses are always slightly more than my income. So it doesn't matter however much money I make in a month, because I spend so much of my expenses, I never have any savings. So that was really silly of me, stupid of me, don't be like me. Huh? But the question is, of course, how do I save more money? Okay, maybe I'm saving 20 bucks a month right now, or maybe I'm saving 50 bucks a month. I want to increase that, because tip number one for these really difficult times is that you need to build up your cash savings. So how do you save more money? You only have two options, right? And again, this is like really fundamental basic stuff. It may almost seem too simple to you, right? But it's very important that you keep this message in your mind all the time. You have option number one, which is to reduce your expenses. So if you compare the previous diagram to this diagram, the expenses have gone down. The box is a little bit smaller than the previous slide. And your purple box of savings has increased to larger, okay? So what you're seeing here is your income remains the same. Let's say you used to have 2,000 ringgit of income, and you used to spend like 1,600. So your savings used to be 400. Now you have 2,000, your income remains the same. You reduce your expenses to 1,200. So now you have more savings, which is 800 ringgit. Sounds really simple. Option number one is, if you read personal finance articles or books, usually they will focus on option number one. They'll tell you that, stop, very irritating advice, stop with the coffee, stop with the bubble tea, stop with the Starbucks, stop with the iPhones, stop with the avocado toast, okay? So that's the typical advice that you will hear in the media. But there's a problem with reducing expenses. There comes a point of time where you can't reduce your expenses more than a certain point, right? Let's say you're earning like 1,500 or 1,600. It's very hard to survive in the city with because you're going to need at least maybe 1,200 or 1,300 every month, right? That's minimum wage. So you can't really reduce your expenses. So what else is there to do to increase your savings is what we will talk here, option 2, which is to increase your income. Okay, so same graph again. Your income is on the left side, your expenses is on the right side, and then your savings is the purple color here. So in this graph, your expenses remain the same. So in the previous example, you were spending 1,600, but your income has increased. So maybe you have a side hustle, maybe you have a gig selling clothes on Carousel or something, and you make some side income. So your income, not just 2,000, now it's 2,004. Your expenses remain the same at 1,006, and you have more savings. So your savings goes up to say 800. Now, I think option 2 of increasing your income, this doesn't get enough attention. It certainly doesn't, it's not as simple as option 1, which is just to cut. Option 2 is really about I put the word side hustle here because I think for most of us, a simple way of getting more income is to start some kind of side venture. Again, like maybe you're selling something online, or maybe you're doing some services for someone who's hiring you freelance to do something. Okay, so option 2, increasing your income. I'd like to leave you with a quote from one of my favorite authors. He says that the amount of costs you can reduce in your life, option 1, is limited, but the amount of income you can potentially make is unlimited. So yeah, it's going to be a balance between option 1 and option 2, not saying choose between these two, but try to balance, try to do a bit of option 1, try to do a bit of option 2, and hopefully you'll be able to increase your cash savings. So some further tips I want to share here regarding this first point that I'm bringing here. Survival is your ultimate priority right now. Cash, there's a saying, cash is king, because what happens if you have something break down in your car? What happens if you have, touch wood, a family member goes to hospital, needs some extra cash? What happens if you fall sick? What happens if you lose your job? All of these things need cash. How much is a good target to aim for? Financial advisors will tell you to aim for 6 to 12 months of expenses, especially in this kind of bad climate, bad economic climate. And when I say 6 to 12 months expenses, meaning that, let's say your monthly expense is 1,000 ringgit, aim for 6 months of that. So aim for to have 6,000 ringgit savings, or if you can, aim to have 12,000 ringgit savings. If your expenses per month are 2,000, so you just adjust it based on that. Now, I know that for some of us, this may seem like an overly ambitious target. Why are you talking about saving 6,000 ringgit when I can't even save 500 ringgit? With that, I will say just aim for improvement. Having 200 ringgit is better than having 100 ringgit. Having 500 ringgit is much better than having 200 ringgit. So don't let the target scare you. I threw this number out because it's important to have a long-term target. But on a day-to-day basis, just aim for improvement. Okay. So I'll go on to money tip number 2. Money tip number 2 is about budgeting and automating. And you've probably heard of this term called budgeting. Budgeting is the concept of setting your money on a monthly basis to be spent according to a certain target. I'm putting a 50-30-20 budgeting rule here because I think it's a really simple to understand and quite a practical way of budgeting. This is actually popularized by the Elizabeth Warren. Not sure if you've heard of her. She was at one point of time considering to run for president. Excuse me. And she kind of popularized this rule of 50-30-20. So in this rule or guideline, 50% of your monthly income, whether that's your allowance or your salary or anything that comes into your income, goes into your needs bucket. So you should pay for things like groceries, housing, utilities, insurance, or your car loans. You should pay it using your 50% of your salary. So if you are earning, say, 3,000 ringgit, try to pay all these using 50% of 3,000 ringgit, which is, of course, 1,500 ringgit. Now, 30% is a little bit more of the fun kind of things. All work and no play, of course, makes us dull. So obviously, we want to go shopping, we want to go hang out, we want to spend on our hobbies. The recommendation is you spend no more than 30% of your salary on these kind of things. This should be your travel, this should be your nights out at Kyo, this should be your poker nights. All of this should be covered by your 30% here. And I think most importantly, if you're doing this right, your 20% is your savings here. Okay, so let's do some simple mathematics. Let's say you are having, again, a 3,000 ringgit salary. 1,500 ringgit goes here for your needs. 30% of 3,000 is 900 ringgit goes here in your shopping, dining out, whatever. And 20%, which is 600 ringgit, goes into your savings and investments. Okay, so that's money tip number 2. That's a sample budget. But most importantly, I want to say that if at all possible, try to automatically deduct your salary. Try to automate it. You can do this using an app. You can do this via instructions on your online banking. And the reason why I'm sharing this is because in my experience, back when I was trying to save money many years ago, I could never save this 20%. Every month I say, so my salary back then, I can share with you, it was like 2,500 ringgit. Okay, back then it was 2,500 ringgit. I say that, okay, end of the month, I'm going to save whatever is left over after I pay for my needs and after all those dinners and whatever, right? Never happened. Could never save any money because by the end of the month, I actually spend more than that 2,500 ringgit. So if you can at all possible, automatically deduct your salary of this 20% first, meaning at the start of the month when you get your salary, just cut it and put it in a bank account where you can't easily touch it. I don't know about you, but most people don't have discipline. So I think that's a really, really helpful tip. Try to automate it as much as possible. All right. And money tip number 3. Money tip number 3 is about excel and diversify. And a bit more of personal sharing again. I think everyone should try and get really good at your work. And the reason why I say this is when I look back at my own experience of personal finance, trying to save money, trying to grow money, the biggest increases that I got in my income were sort of very traditional things happening, like I got a promotion at work or I switched a company and got a raise. So the reason why I bring this up here is that I think people need to get really good at what they do. And I say this in the broad sense of the word, right? I don't mean that you just become really good at your work in your day job. Maybe that's not what you're really interested in. Maybe that's not what your long-term goal is. Whatever your work is, maybe it's your side hustle or your hobby or your online business. If you want to make money, you want to make good money, you have to absolutely get good at it. Like super obvious advice again, but I say this because a lot of times we read articles and then it's like, oh, 5 hacks to get promoted, or 7 hacks to really make money fast. Whereas I think that actually promotes a wrong perspective of how the world works. The world works in terms of if you get really good, you have really valuable skills, you'll eventually get paid. That's actually how the world works, not sort of going to hack it and this and that way. Okay, so on the same topic, I like people to think in terms of skills, not just qualification and experience. So again, it's not just about having that professional qualification or having that 5 years or 10 years of experience. I would like to propose the idea that if you build skills that are valuable and highly sellable or marketable or highly profitable, you can make good money, okay? That's my perspective at least. And I would like to suggest that if you can, try to find the sweet spot between what people will pay for and what you're good at. So I know a lot of us are passionate about our hobbies. For example, myself, I really like playing basketball, but I'm not good enough at basketball. People are not going to pay me for my level of skill at basketball, which is really quite bad. But let's say you are really good at, I don't know, online gaming. Maybe you're like a top 5 player in Dota or COD or something. Maybe if you're really good at that and there's some demand in the market for it, you could make a lot of good money there as well. I'm going to take this a bit more sort of typical work example. If you work in a normal organization, let's say you are really good at Microsoft Excel. I'm not kidding you, right? Like Microsoft Excel skills are really hard to find. And people who are really good at Excel can actually really get quite interesting opportunities with their career. So yeah, it can be something as simple as Microsoft Excel, but hopefully find something that you're interested in, something you're good at, and what people would pay for. If you like reading self-improvement books, the Japanese people have a term, they call this ikigai or something. Okay, so that's my third money tip, excel and diversify. And with that, I am actually going to go into the last part of my presentation. I'm going to wrap up pretty quickly so that we have time for question and answer. Again, if you've got questions, pop them into the question or chat below, and I think Kelvin and Chester will help me with that in a bit. So let's talk about investment strategies for tough times that we are in right now, because a lot of people ask me questions about investing. So again, I'm going to bring this back because it's so important that we often forget. Survival is your priority, okay? Survival is your absolute priority. You need to have cash. We already spoke about it. Aim for 6 to 12 months. Don't ever invest with money you need. The whole concept of investing is that you're taking on risk in exchange for getting some kind of profits. So don't ever borrow money to invest. Don't invest with money that if you lose your job next month, touch wood, these are supposed to be your emergency savings. So I would suggest that before you actually think about investing, especially in high risk stuff, aim to have those 6 to 12 months savings first. Okay, that's my first point. Now I'm going to go into golden principles for most people. Some of you, I think if you share these principles to me like maybe 10 years ago when I was much younger, I would say that no, these rules don't apply to me because I'm supposedly smarter or better investor than other people. I think I was wrong. I can say very clearly that I'm wrong. Most of us are going to be pretty average, normal investors. I know maybe 5% or 1% of the population can study the stock markets very well and make a lot of money there. But most of us, these are principles for most of us. Don't try to time the market, right? So people will ask me like, is it time to buy now? Is it time to buy 6 months later? Or should we wait like 3 months? Or should we wait till the stock market dips a bit lower? I think that's the principle of trying to time the market. Historically, statistically, it's shown that most people can't time the market. So if you look at it in terms of a long-term scenario, you're not going to make money by trying to time the market. I would suggest that most people don't try and choose individual stocks. Why? Because even professional money managers underperform index funds. If you haven't heard of index funds, these are what we call passive investments. I'm not going to go too deep into that, but basically history, statistics, research has shown that if you choose individual stocks, either you have to be damn good and be in that like 1%, 0.1%, or you are basically going to not make as much money as you probably could, or you're going to lose money, okay? So most people probably shouldn't try to time the market, don't choose individual stocks. Most people should diversify. When I say diversify means don't put all your money into just one thing. So don't save for 6 years and then suddenly your best friend comes and knocks on your door and says that, invest with me, this is the opportunity of a lifetime. You're going to make tons of money. Don't give him all your money. The way to invest is to invest in a lot of things, right? Invest in a couple of stocks. Don't invest in just one stock. Invest in not just stocks, but stocks, bonds, unit trusts, whatever, okay? Diversification means you don't put all your eggs into one basket. Now, how that would work out for a normal person, I'll share with you in the next slide. I think most importantly, you have to invest consistently for the long term. So we're talking not just 1 year, 2 years. If you're talking about putting your money in and then expecting to take it out in 2 years' time, that's, I would call it sort of trading Worst case, it's a bit like gambling if you don't know what you're doing. When we're talking about investing, it's more for your retirement. I'm talking about investing for decades, okay? So if that is a little bit complicated, if that's a little bit difficult, consider getting a robo to help you invest. I'm not sure if some of you have heard of this term called robo-advisor. Robo-advisors basically allow you to invest with small sums of money. Like this company here is called StashAway. They were the first ones in Malaysia. You can invest with as low as 20 ringgit. And that 20 ringgit is very interesting, right? When you invest at 20 ringgit or 50 ringgit, 100 ringgit, excuse me, it's not actually going into one stock, right? It's not like you go to the market and you say, I'm going to buy AirAsia stock. Even if you did that, you need at least, I don't know, at least a few hundred ringgit to buy AirAsia stock. And that's just one stock. When you invest with something like a robo, even though it's like 20, 50, 100 ringgit, they actually help allocate your portfolio into a variety of investments that is partly in the stock market, partly into gold, partly into bonds. And it's really cool because these apps make it really simple to understand. So I would suggest that if you are new to investing, please consider getting a robo to help you invest. And if you start with just 20 or 30 ringgit, you're going to learn a lot. Consider that just sort of like paying 50 ringgit to learn something super important for your future. Okay, so I would recommend that for beginner investors. And a really interesting fact here, you guys are really young. Just remember that you have time. Warren Buffett, I think, is number 3 top richest man in the world right now. He's got around $84 billion of net worth. 99% of his wealth was made after his 50th birthday. So yeah, even one of the richest men in the world, 99% of his wealth was made over a really, really long time, right? So start investing when you're young, guys. You guys are really young. Yeah, there's no better time to start right now. Some of you asked, like, the market's going down, you know, I'm so worried. If you look at it in terms of 1 year, 2 years, 3 years, yeah, of course the market looks really scary. But if you're looking at it in terms of decades, I think that's when it makes more sense that you can invest without fear. So I'm gonna quickly wrap up. Again, this was a really brief session, but if you're interested to find out in more detail some of the things that I've spoken about, item number 1 here, you can check out my blog. It's about what happens after the coronavirus crash. There's 2,000 plus words here. You can knock yourself out. If you're a little bit more interested in how young people should manage their money, check out my article on this one, how should young graduates manage their money. And if you're worried about investing, maybe check out this article on iMoney, which is, should you invest now despite the COVID-19 recession? So with that, I'm going to end my presentation, and then let's see if there are any questions that are coming in. Kelvin, maybe I'll pass to you. Is there anything?
All right, thank you very, very much, Mr. Stingy, for that very, very amazing sharing. I think what I'll do is I'm going to run through the questions that has been posted. Some of them have been answered by me because I think it's quite general. Hopefully I can help you out there.
Thank you.
However, if you have anything you want to add, then perhaps we will just take it as we go along. Now, the first question was for Byron, and Byron said, how do adults redeem cash payments? The answer to that was actually, Byron, if you are still with us, like what Edwin said, you can go to bpn.gov.my. That's the website. Check your eligibility. And once you're done, for adults per se, generally all your packages would be deposited into your account if you are registered with LHDN. Apart from that, you can apply through the website when it's working. Do try constantly, because I understand and we understand that many people are actually trying to get their hands on those packages. Aaron, I don't think there's anything here.
Yep, that's great. Thanks.
All right. And then next one is Joshua. Joshua, you were asking us if it's a good time for graduates to apply for jobs. I actually did a talk on Monday about whether this is something that you have to do. I think some of you here were there. My view is very simple. From an employer's perspective, applying for a job and whether you get the job are two separate considerations. I think the easiest way to answer you is if you don't apply, you won't get the job. So apply away and see what happens. The economy generally does not really dictate whether or not we need the workforce. We need the workforce no matter what happens. Next one would be employment in tech companies. I think this was by Sumit. Let me have a look. Aaron, the question is quite interesting. It says something like, yeah, let me see. I have it here with me. Okay. Do you think there's a possibility of a steep increase in job opportunities after the pandemic in tech companies specifically, as we are seeing more tech products being produced? Or is the graph going to be the same, Aaron?
So I think that tech is an interesting thing. It has proven to be more resilient than other industries just because that a lot of tech is based on automation and things are online. So I don't know if it's going to be a sharp increase, but I do think that most companies are sort of, this coronavirus thing was sort of the splash of water in the face that they realized that, oh shit, we should really take tech seriously. So I do think that there will be a general increase. I don't know if we can say it's going to be a sharp increase, but even your traditional sort of really old companies are all looking into tech right now because no one can go to the office. So definitely the momentum is there on the technology side of things.
All right, Aaron, thank you very much. I hope that answers Sumit's question, which now leads me to the next question. I will jump a few because Alison Chin then asked another question relating to tech. I think there's two questions now. First one, Aaron, if you can take it down, is this. Do you think it's safe to put your money with a robo-advisor when many tech companies have or will go bust? And of course, she's referring to the Smartly in Singapore, which recently closed down. That's the first one. Once you answer this, I'll give you the next one that comes along.
So thanks for the question, Alison. The way that robo-advisors work, especially in this country, is that all your money doesn't belong to the robo-advisor. So the robo-advisor does what you call it's held in trust, okay? They can manage your money, but your money is not actually in their name. So even if the robo-advisor goes bust, the money is still in your name. You still literally own the stocks, the bonds, the ETF, whatever it is, even if that company goes bust. Okay, so you absolutely have nothing to worry about. The robo-advisor is just a sort of fund manager. Your funds are still in your name.
All right, thank you, Aaron. And before I go back to Alison, then leads me to the next question. Is it then, what does robo-advisor actually do? I think you answered very briefly that they invest in mostly everything. But the question given by, I think, Yi Bong, I think, let me have a look. Yes, Yi Bong, is it safe to use?
Yeah, absolutely. So robo-advisors, for those of you who are not familiar, they are, you have to get a license from the Securities Commission to operate a robo-advisor. It's a really difficult and arduous process. So you can be sure that using a robo-advisor, your money is safe in the sense that the company is not going to run away with your money. Now, as to making profits or losses, that is a normal part of investing. If you're worried about risky investments, you can actually set your risk profile to be like super, super safe so that they will only invest in like really, really stable kind of investments. So, but for those of you who are high risk, I know maybe some of the guys here are like super high risk kind of people. You can also set the robo-advisor to invest in like high risk stuff for you.
All right, thank you, Aaron. Just a few simple ones before we get to the heaviest at the bottom. Edwin is asking, when you budget something, when you said budgeting, were you referring to budgeting on a gross pay or budgeting on net pay?
So I'm always referring to budgeting on net pay because you can't really touch your gross salary. Yeah.
Okay, fantastic. And also the next one is this as well. If I didn't miss it, I think it just came directly after Edwin, which was a question. Sorry. Yes. In your view, assuming someone is able to invest? Do you consider investing a want or savings?
Do I consider investing as a once or a savings? So I consider investing, I consider investing as its own separate category. It's a little bit more similar to savings in the sense that if you invest in like very, very low kind of risk investments, it's kind of like almost like your savings. Like, for example, I'll give you an example. If you buy something called Amanah Saham, if you're Bumiputra, congratulations, you hit the genetic lottery, you can buy Amanah Saham Bumiputra, which is technically an investment, but it's also super safe. So, I mean, it's a little bit like a savings as well.
All right, thank you, mr-stingy. I'll ask you now, back to this example you gave earlier about stash away, which one of the examples you gave. First question was, which market does stash away actually invest in? Is it local, US, or what do they actually do?
So stash away invests mostly in the US, but they also allocate part of the portfolio to some of it in Europe, some of it in markets like Japan, some of it in gold. So the interesting about stash away is if you tried to take your own money, let's say 1,000 ringgit, and you tried to buy stocks I'm going to buy a little bit of stock in US, I'm going to buy a little bit of stock in UK, I'm going to buy a little bit of stock in Japan, you're never going to be able to do it with 1,000 ringgit. You might need, 20, 30,000 ringgit, and then you will get really, really small bits. The really cool thing about things like stash away is you just invest that 100 ringgit, it will literally break that 100 ringgit into small bits and invest it across markets all across the world.
All right. Okay, so I will do a quick fire with you after two more questions. One is this: what do you think is the new normal for investment?
I'm going to say that this is more of the company's new norms. I think that for the past sort of decade, the stock market has been basically going up and up and up. So I think we are in for a correction. Again, this is just my personal prediction. It could be right, it could be wrong. I think that companies are going to be more careful in the future. We see a lot of companies that are struggling with cash flow right now. We see companies struggling with loans, unable to pay loans. So I think that the world has sort of gone to a place where everyone has taken on a lot of risk. I expect that companies and investments, everyone is going to tone down on the risky stuff for the next near future. So yeah, less of the risky behavior.
Right, so it's very general, safe, safer to home kind of thing.
Yeah, I'm expecting that.
Okay, so now I'm going to do a quick fire because I see people like Jaishin, Selwyn, Chester. Before that, one more thing for the quick fire. What are other effective mechanisms to help local businesses other than going online? Would you want to take this, or it's?
I think you or Chester could take it as easily as I could, but I think that people should try to help support local businesses as much as possible, whether that's those stalls that are very near your houses, restaurants or anything. Online delivery, of course, but please try and support local businesses because I think 99% of the economy is, I forgot, it's a high percentage of the economy is actually with small businesses. So yeah, please support your local businesses by buying their business, recommending them to your friends, and yeah, even do fundraising for people in need. That's what I think the best people can do right now.
All right, so the quick fire will start now. People like Jaishin, I think even Jasmine, I think Selwyn. It's a very general, or rather, it belongs to the same group of questions. Now here goes. What do you think the outlook will be, and or do you think this is the right market to go in? Okay. 1, real estate.
Real estate probably going to be down for the next, I don't know, maybe 1-2 years. I think it's going to be tough times for everyone in real estate. But yeah, I mean, if you're buying to stay, it doesn't doesn't hurt you because you still got that house. But if you're buying to invest, which is basically taking a loan to invest, I would be quite cautious about it.
Okay, how about investing in peer-to-peer lending? Since SMEs are greatly affected.
So I expect peer-to-peer lending to be quite affected. Before the whole crash, I think it was not uncommon for us to get like 14% returns a year. It's quite common. Sorry, I shouldn't say it like that. So if you invest in a peer-to-peer lending platform like funding societies, you can get like 14% a year. It's quite common. But of course, when the economic downturn happens, a lot of these small companies are going to have trouble. So I would expect that some of your investments also are going to default, which means you should probably expect not to get 14% anymore. Maybe you only get 8% or 10%. So if that's acceptable risk for you, then by all means go for it. But P2P is a high risk investment game. Yeah, don't think that it's a low risk thing.
Okay, how about then specific stocks such as tech companies like Amazon, maybe Google, Apple, for example? Should we just bang on those and get it over and done with?
Yeah. So this is, I think, where we're sort of crossing the line into financial advice, because we're starting to talk about specific companies, right? And again, I'm not in a position I don't know enough about the markets to say it. But I would say that my general principle holds true. I don't think we know enough about individual companies to pick stocks. I would rather invest in broad markets using robo-advisors like StashAway.
What about gold?
Gold is an interesting one because traditionally it's a safe haven, meaning that in bad times people will buy gold. The thing about gold is the price has already sort of gone up. So expect that if you put your money in gold, over a long period of time, your value will sort of hold or probably go up. But gold is traditionally not seen as a stable or regular investment kind of thing. Usually it's, if you're investing for decades for your retirement, usually it's always stock market and bonds. So gold, don't look at it as a main part of your investment. Look at it as a sort of complementary. Maybe you want to put 1% or 5% of your money into gold.
Okay, what about Forex then?
So I don't know much about Forex, but Forex to me is more of an activity to make money if you can do it well. Don't look at Forex as investing because it's not really investing. Typically when people say Forex, they're talking about trading. The US dollar go up, I buy. I sell when the Japanese yen, blah, blah, blah. So that's more of a trading activity. You can do that for anything, right? You can do it with stocks, you can do it with bonds. I would suggest that statistically, research has shown that most people lose money in the Forex markets. If you have a very specialized set of skills, you may be able to make it, but yeah, be very cautious because most people lose money in Forex.
Okay, and I obviously save the best for last, Mr. Stingy. Cryptocurrency.
I would say cryptocurrency is even higher risk investment than anything that we've spoken about, apart from Forex. Yeah, cryptocurrency is a higher risk than peer-to-peer lending, higher risk than stocks, higher risk than gold. I would say if you want to try it, it's with the understanding that you might lose your money. So this is money that you're prepared to lose. And I can say this because my full-time job, I work with a cryptocurrency exchange. You should be worry about your proper savings, make sure all that is in order before you start thinking about high-risk investments. So have your savings in place, have your safe investments like fixed deposit and amanah saham. And then if you want to take say your 1 to 5% and go and try a bit in Bitcoin, that's fine, but be aware of the risk.
All right, so that's done, Mr. Stingy. Just a few wrap-up. I think there's no more questions coming in. The wrap-up is basically this. Derek expected this from you. I think, Stingy, you see it as well. Items, watches, limited edition sneakers, things like that. Are those items which you really want to invest in now, or it's?
I would say those are collectible items. Usually those are investments for already rich people. So these are people who already have their stocks, they already got their bonds, they already got their estate, they already got their houses, and then they are investing in these kind of things. Now, granted, there are things that can appreciate in value, right? Your sneakers, even if a guitar or a ring or a watch. But I would say that for most people, it probably doesn't make sense because it might take you 20 years before your bag increases in value, and it might be hard to sell. So probably not for the average person. If you're already rich AF, then yeah, by all means.
All right, thank you, Stingy. And I guess the wrap-up question would be this. Apart from Stashaway and apart from these other things which you have shared with us today, what other platforms would you recommend? And also, if you were to give your top 3 areas or rather industries or institutions that a beginner should start looking at, what are those industries?
Okay. When you say industries to invest in, is it, Kelvin?
Yeah, industries.
Okay, so go back to your first question. I know I talk about Stashaway because they're the first robo-investor licensed in Malaysia, but there are actually 3. So there's Stashaway, there's MyTeo, and there's Wahid Invest. If any of you are interested in Sharia compliant robo-advisors that are Sharia compliant, which is Wahid Invest, I would recommend that, again, if you're new to this, check out the robo-advisors first. If for whatever reason you're not so keen, then look at the Amanah Saham stuff. Again, if you're Bumiputra, it makes absolutely jackpot 100% to try and maximize your Amanah Saham Bumiputra. If you're not lucky to be Bumiputra, there are other Amanah Saham, for example, Amanah Saham Wawasan. It's just a little bit hard to buy these kind of things, especially if you are, because there's limited quota. So if you're Chinese, it's a little bit hard to get. If you are Indian, a little bit easier to get. It is just the way the market is. So Amanah Saham, check that out. Yeah, thirdly, I would recommend start reading about ETFs. These are exchange traded funds. The only thing about ETFs is they're quite limited in Malaysia. Like, I think Malaysia has only less than 5 or 6 ETFs on the market. So hence why I actually suggest people to look at robo-advisors first, because robo-advisors allow you to access much more ETFs. So yeah, my top 3 would be robo-advisors, Amanah Saham, and ETFs. If you're talking about industries to invest in, I work in the tech industry, so I'm very excited about the tech. Just understand that tech companies, a lot of them go bust. So for every Google or Amazon, there are maybe 9 other companies that go bust. So it's a little bit of a high risk, high return kind of market. If you want to go into what they call the defensive areas of things to invest in, these are things that people will need regardless of economic conditions. So these are things like your, they call it the FMCG. So things like healthcare, things like pharmaceutical, things like soap. Even in a crisis, you still need to bathe, you still need soap. So traditionally, these are industries that also do well. If you want to be a bit controversial, industries like the so-called sin industries also tend to do well in depression. So things like alcohol or cigarettes. But I mean, that's up to you lah, if you believe that you can ethically invest in this kind of things. Yeah.
All right. Thank you very, very much, Mr. Stingy, and thank you everyone for being here today. I think DRI Chester has a private request. She wants all of you to name your Rotaract Club. So I'm not sure, Chester, you may want to tell them how you want to go about this.
All right, everyone can just send a representative to put in a chat box, like which Rotaract Club you come from. Like you're from Rotaract Club Ampang. Yeah.
Yeah, like what Jaishin is doing now, correct, guys?
Correct.
Wow. Bangsa, Taylors, hello.
Right, we've got Bangsa, Taylor's Lakeside, Petaling Jaya, Ames, Pudu, Help, Petaling Jaya, Ampang, Taylor's ATC, Manipal International, Subang and UTP. Go, you guys rock. Bias in that sense. We've got what are coming out? We've got Asia Pacific University, Ames, Taman Tasik Buaya. I don't know where it's coming from. Yes, Brookside, yes, Taylor's. Thank you very much. Kawasaki Daishi, Kelvin. Thank you for being here all the way from Japan. We've got Kanajaya, Taylor's with Ada, Kelvin Soul. Thank you, Thomas. I love you too. Who else do we have? That was an amazing. Yes, so thank you so much for being here, everyone. Aaron, any closing remarks you would like to make? Ames, huge shout out to you guys as well. Aaron, any remarks you want to make before we end the session here this evening?
Yeah, I just want to say thank you again to Rotaract District 3300 for having me. And then guys, again, you guys are young, you have a long ways in your careers. Never stop learning, never stop looking for improvement. Again, some of the things we discuss are like super detailed, complex. You know, take your time to learn about this thing. Improvement is the really important thing here. So yeah, if it seems too difficult, don't worry, just keep taking that next step. And all the best in your financial journey.
Chester, anything else you want to say before we end the session today?
I would just like to thank everyone and also Mr. Stingy and Kelvin Koo for having these sessions. I hope all the Rotaractors get something to learn something from you guys, and also stay safe, everyone. We'll do more this kind of session soon.
Yeah. Did you take a picture already, Chester? Or...
Yes.
Okay, cool.
And of course, the final shout out to Alexia from D9220 Rotaract Rodriguez all the way. Thank you very much for being on this online virtually. I guess wrapping up tonight, this evening, stay safe, stay healthy, stay home, duduk diam-diam di rumah, and we can definitely get through this pandemic. And I hope to see all of you again very, very soon. So thank you. Good evening. Stay safe. Good night. And see you guys soon. Cheers.
Bye, guys. Thank you.